Congressman Paul, are you with us?
I just got on. Thank you. I'm with you.
Great timing. We're so pleased to have you with us on this program today and get a chance to catch up with you about all the activity in Washington, to find out what the near term holds for the United States and for the United States budget, and where we're going fiscally in this country. Congressman Paul, I saw a Senate proposal yesterday, and I wanted to get your read on it from Senator Coburn.
Okay. You asked me about that, or?
Yes.
Okay, I haven't gone over that in detail. I heard somebody doing an analysis, a CBO or somebody, and said it wasn't saving quite as much money as he said. But I don't think I can give you a good comment on it. But anything that suggests cuts, and his sounded like a major cut. So let's hope that the momentum is building in that direction.
Well, do you think it is? Does it seem to be that way in the House as well? Is there a realization that that spending badly needs to be cut in this country? Is it growing?
Well, yes, it is. I'm not all that happy with what we're doing on the floor right now with the bill, because the sentiment's there. The rhetoric is very strong, but the bill doesn't do anything. So, except it continues a $1 trillion deficit. At the same time, it raises the national debt by $2.4 trillion, and that's not what I've been agitating for. I want no increase in the debt, and I want to have some real cuts. But the rhetoric is good. They're responding to the people's concerns, and people who would be listening to the debate would say, this is a good step forward. But quite frankly, I don't think it's much of a step at all.
Yeah, it seems to be it's the same old syndrome that they want to get us through the next election in 2012 and to raise the debt ceiling enough to cover that. But as far as people that hold 30-year United States government bonds, nobody's really concerned that those bonds will be worth anything when they're redeemed in 30 years or in 10 years for 10-year bondholders, for that matter.
No, if the markets were concerned, the interest rates would be going up, and they haven't been going up. They know they're going to get paid. And, I've made the suggestion, and I've gotten a pretty strong defense from the free market economists that, you just need to get a temporary reprieve until we got our house in order. Just write off all those debts to the Federal Reserve. They have $1.6 trillion. They bought it with money out of thin air. Why should that be on the books, and why should we worry about paying them interest? Because that's all gimmickry. So that would be one thing that we could do. But I think the bondholders know that they're going to get paid. And even the Social Security recipients, even though they're scared, a lot of them, they're going to get paid. And my expression today was my concern about being paid with what? With money that has no value. That's where the real default is. That's where it's coming. We will not default on not paying the bills, but we will default on paying them off with bad money, because we won't quit spending the money and we keep these deficits very high.
And because we've been defaulting in that fashion literally for 100 years in any event.
Yeah, the defaults have been, quite regular. In the 30s we did it, and in the 60s with the silver, and then in the 70s with gold again. So that is common practice. It's not like this would be the first time, but I just don't think the default is going to happen. They're already $75 billion over the debt limit, and they find ways of doing that. Mm-hmm. And this arbitrary date of August 2nd, I think that's the date everybody wants to start on their junkets and get ready. So that's why the deadline is out for that date. But but I don't know. I don't know if anybody knows exactly how this is going to come about. But Obama says he wouldn't take a temporary increase. If August 2nd comes and they haven't done it, they'll do just like they do with those CRs. All right, let's do it. Continuing CR for a week or a month or 6 weeks or whatever, and just raise the debt limit. Something like that could happen this time. But I think the debate, in spite of the fact that it doesn't go exactly the way I would like, I think it's a good debate. People in this country are starting to realize how serious it is. We don't have serious answers, but the people know that it's something serious. I think it has been reflective in the Tea Party movement and the new members of Congress, but we still have a ways to go before the people will accept, the reforms that we need. And the point I made in my 5 minutes today was that none of this is very meaningful unless the American people and the Congress get together and decide what we should do as in our government. As long as the people expect us to and support and agitate for policing the world and also never question the entitlement system, nothing's going to improve. That's when we will literally destroy the money and have runaway inflation. So this blaming, I get so tired of this, Republicans blaming the Democrats and vice versa, like one is good, the other is bad. But, the people have a lot of responsibility, too, because over all these decades, it's been the people who re-elect all the congressmen who vote for all this stuff. So, if it was just the Congress totally independent, it had been routed a long time ago. But the fact that some were routed last year, maybe the people are waking up and say they've had enough.
Well, I thought it was ironic that some were routed. I don't know, 30 members between one or two senators and members of the House were routed. But the very next day, the day after the election, it was as though nothing that the voters had said about stimulus packages and deficit spending and bailout bills mattered, because the very next day, it was remarkable for its in-your-face timing. The Federal Reserve announced QE2 the day after the election.
And that's one issue that is gaining an interest, and a lot of people understand it. But the matter of fact, it was just today I was talking to another member, and I was talking to him about just not paying the Federal Reserve, and he says, well, isn't the Federal Reserve, we can't touch them because, they're totally private. And some people get confused on that. It was created by the government, and we don't have to play their games, and we can rewrite the rules. But he thought they were untouchable. And some people believe that, but I believe if we ever get them exposed, they'll be very touchable because the American people will be outraged. And those numbers are growing because of how they were able to create trillions of dollars and bail out banks, not only in this country, but overseas as well.
You would think that at least members of the Congress would have noted what few disclosures we were able to get out of Dodd-Frank or whatever it was, the little that we learned, and how shocking it was about them acting as the central bank of the rest of the world and, transferring wealth. And you get stories about Goldman Sachs paying back its TARP loan, and then you look a little deeper and you realize the only way they paid it back is the Fed stepped in and bought a bunch of, worthless or toxic paper from them and transferred onto the balance sheet of the Federal Reserve. The closer you look, the worse it is. But you would think that people in Washington who are closest to it would be the most aware.
You'd think so, and the same thing with the banks. We bought up all those assets that had no value, and then the banks didn't have to go into bankruptcy, and then the banks started borrowing money at 0%, and they're back making billions again. The Democrats don't say anything about that, but they're anxious to say, well, we got to tax those corporations that are making profits now. But why don't they just quit bailing out their friends? And it's done by both parties, Wall Street and the banks.
Sure.
They're pretty well protected.
Well, it's ironic that banks are making money and they're reliquefying their books in this activity, but they're not doing. Banks make money by loaning money, but you haven't seen a burst of loaning money to American businesses and small businesses in this episode. Instead, you have seen things like banks borrowing at the discount window for 0% and turning around and funding the debt, buying treasuries in a risk-free operation at 3.5 or 4 or whatever it's been over the last couple of years. And so it's been a risk-free operation for them, but it has kept them from having to find worthy borrowers in the economy that could have created jobs and hence prosperity for us all.
Yeah, and you take that problem as well as the burden of the coming regulations, and there are plenty who are frightened about borrowing more money. But the banks are much better off doing exactly what they're doing, getting free money and just loaning it to the government. Now, when the crisis builds and gets worse and there's devaluation and we have price inflation, they'll even be in trouble there because those bondholders are going to lose out because those bond prices are going to go down. But for now, it's the perfect place to put it. And it is amazing, that anybody would ever, in this day and age, buy a 10-year bond or a 30-year bond with plans to use that, because nobody believes nobody believes that's going to have, face value at the end. It's I would think if you bought a 10-year bill and bond right now in 10 years, you're lucky if you get 20% out of it. When you how rapid the inflation will be.
I think you're right. It's a money bomb today for Congressman Ron Paul. Congressman Ron Paul is on the line with us. I'm Charles Goyette, author of the New York Times bestseller, The Dollar Meltdown. And the webpage is readyforames.com, readyforames.com. Please let your friends know that Congressman Paul is on the line with us now so they can listen at readyforames.com to our conversation about politics, about the debt ceiling, about the economic future of America and reclaiming our prosperity, and a little bit about Iowa as well. And don't forget the webpage for contributions, ronpaul2012.com, ronpaul2012.com. Congressman, I had to laugh. I mean, it's not funny exactly, but I had to laugh at the way they seem to be digging into the same old bags of tricks all over again, the statists, economists, and Keynesians that march us into this morass. I saw a reference the other day that they're looking at adjusting the consumer price index again, so they can dilute us a little bit.
Yeah, I've been complaining about that, and did mention that with Bernanke the other day, because I'm sure you're familiar with John Williams. He claims, the prices by the old CPI is going up over 9% in the last 3 years, per year. And so they want to change it again, but that's just to stiff the retirees and the people who cost their living increases in Social Security. So, but I am convinced that, and I think there was a time when I essentially got Bernanke to admit it, that is their way of paying debt. I mean, I sincerely believe that is their goal, is to liquidate debt through just printing money, and that's much smoother than just not sending out checks. They're always going to send out the checks. Maybe a few very, very small countries might just go into bankruptcy, but we will not do that. We'll always send out the checks, but they do not have control over the perceived value of currency, and that is out of their control, and someday they'll realize that, and then we'll have a new monetary system.
There was a classic moment, one of those moments that'll live forever on the internet, when you in the hearing, when you asked Bernanke if gold was money, he said no. When you turned on him and said, then why do central banks hold it? That was a wonderful moment, and of course he just, you could see him scrambling to think up, what could he come up with, and he finally said tradition.
Yeah, but that's when I asked him, well, he said they held gold. I said, well, but it's not money. I said, well, why don't they hold diamonds? Diamonds are valuable. Central banks don't do that. It just turns out that gold is a much more functional money than diamonds. Diamonds are a hard asset, and you could preserve value there on runaway inflation, but it's not like gold, and it's not because you and I might believe in it. It's because it's been around and been tested, and people still think of it as the ultimate money. See, they won't admit that, but that's why they hold the gold, because it is the ultimate money, and they know it.
Do you think, I suppose it's a moot point, but it's curious, it's something to be curious about. Do you think somebody at this point now, with all of these trillions of dollars thrown at the problem, all of this Keynesian nonsense, all of this attempt to spend our way to prosperity, do you think that somebody like Ben Bernanke